Binance has been one of the hardest hit assets in 2026, dropping over 40% from its January high. But the chart is now telling a very different story. Multiple signals are aligning at the same time. Momentum has just triggered a buy, and there is a price gap above with virtually no resistance standing in the way. In this Binance BNB Technical Analysis video, we walk through exactly why we think this move higher is just getting started. For those who follow us, here's the structure of our analysis. We work through 6 pillars: position, pattern, price, momentum, volume and volatility, and time, all sitting within an overarching macro outlook that incorporates correlated markets. You can see how we apply this in a practical way, and it ensures we take a balanced and objective view before placing a trade. Let's start with the position. The high for Binance was made on the 13th of January 2026 at $959, but the real descent began on the 28th of January at $908, and from there, price fell sharply to a structural low of $574 on the 6th of February. A further low was made on the 2nd of April at $571, marginally lower, but importantly holding close to that February level. 2 tests of the same zone. That tells us there is solid support in that area. And since that 2nd of April low, something has changed. Placing a price channel, we clearly see an uptrend. We are now seeing weekly ranges pushing higher, with higher lows printed on the 12th of April and again on the 29th of April. This developing structure aligns with our upward price channel. The trend of lower lows is being challenged, and the shift is underway. Now let's look at our Fibonacci zones, because this is where the roadmap becomes clear. We have an established Fibonacci support zone sitting between $603 and $606. This is the level that has been holding the structure together. Above that, our Fibonacci resistance zone sits between $716 and $720. That is the upside target, and between these 2 zones is an important waypoint. The 16th of March high at $687 acts as a flagpost that price needs to navigate on its way higher. Breaking and holding above $687 would be a meaningful step toward that resistance zone. Turning to momentum, and this is where the conviction builds. Yesterday, our proprietary indicator triggered a buy signal. That alone gets our attention, but it doesn't stop there. On the Ichimoku chart, the TK cross is confirming the same directional bias, a buy setup. And adding further weight to this, price has broken above the 22nd of April swing high, which is a structural confirmation that the direction is shifting to the upside. However, a decline below the 12th of April low would invalidate this setup. That is our line in the sand. As long as price holds above it, the setup remains intact and we stay long. Is our volume and volatility confirming this up move? We use 3 specific charts here that together paint a very clear picture. The first is range, which tells us whether the strength of price movement is increasing or decreasing. For Binance, the weekly range had been compressing, dropping from 56 down to 38 and then to 28. But this week, we are seeing a reading of 49. After weeks of tightening, range is beginning to expand. That is a clear early sign that something is building. The second chart is close strength, which tells us whether price is closing near its highs or its lows, and therefore who is in control. This week's reading is 67%, meaning price is closing in the upper portion of its range. Buyers are firmly in control. Looking at the monthly picture, the progression is even more compelling. Readings of 16%, then 20%, then 53%, and now 67%. That is a consistent and building shift toward buyer dominance, a clear bullish signal. The third chart is the professional close, which tells us how professional participants are positioning themselves at the close of each week and month. The weekly and monthly readings are not yet shouting from the rooftops, but the monthly is beginning to close higher. Professionals are quietly positioning, and when professionals start moving, it is always worth taking note. The anchored VWAP tells us the average weighted volume for the year. We are trading well below both the 2025 and 2026 readings. These act as magnets to prices. With such a distance, this may indicate that Binance is now oversold. We talked about the savage decline from the 28th of January high. Well, this decline left a price gap, meaning there are no left levels of support. On the way up, this means equally there are no levels of resistance. A quick rise would meet little to no resistance at these levels, allowing Binance to have a good run-up. This adds more weight to our reasoning. So let's bring this together. The structural low has been tested twice and held. Higher lows are developing. Our momentum indicator has triggered a buy signal at Fibonacci support. The TK cross on Ichimoku confirms it. Price has broken the 22nd of April swing high, which is a structural confirmation that the direction is shifting to the upside. Close strength is building consistently. Professionals are starting to close higher on the monthly, and we have both the anchored VWAP pulling prices up to fill the price gap formed at the end of January. That is a compelling argument for a buy. Every signal is pointing in the same direction, higher. The key levels to watch are simple. On the upside, the first target is the March flagpost high at $687. Clearing that opens the path toward the Fibonacci resistance zone between $716 and $720. On the downside, a close below the 12th of April low invalidates the setup. The signs are there. The signals are aligned. We are not sitting on the fence. We are watching this move higher. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read, and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to our channel, Crypto Trading Mastery. We publish daily Bitcoin and crypto analysis, and hit the notification bell so you don't miss our next video. Thank you for watching. We'll see you next time. Take care.